open from the audience. One question
Yeah,
I'll just put up, which is
please,
very
please.
exclusively to you. Metal stocks have rallied sharply after aluminium prices rose due to Middle East tensions. Do you
Yeah.
see this is a short-term war reaction or start of sustained geopolitical premium in aluminium prices? So I would like you to equate with the stock
Yeah,
prices
yeah.
of the.
Yeah. I think it's a very tough question.
But answer in a simple way.
There are a lot of people who talked about, oh, this war will end in 3 days. It's already 15 days, okay, and it could be who knows 15 weeks. So that's exactly what we thought, including I thought in February 2022 Ukraine-Russia conflict. यार एक दो महीने में खत्म हो जाएगा. We are into the 5th year of this conflict. Okay, but therefore the point is we can't take a bet on the war.
Okay.
Therefore, we need to build scenarios. In 15 days, so much has been the effect. What if it continues for 2 more months? What will be the impact? What if it continues for 6 months or 1 year? So we need to build scenarios. As the war progresses, the situation, the supply chain disruptions are going to get worse, and therefore there can potentially be a severe shortage, and the obviously aluminium the prices will rise. Prices have already risen, as we all know, and therefore the big question today is when will it cross $4,000 a ton? And then therefore there is high potential. But remember, I want to caution my friends: don't assume that the war will never end. Don't assume that there will be no price correction in aluminium. It can happen. How we can't time the market, because the timing of the market is one, but we can't time the end of the conflict, end of the military conflict. I think no, even Trump doesn't know when it's going to end. Okay, that's the situation, and therefore a lot of caution is required, and that's why in one of my slides, if I remember correctly, I said, please don't take far forward position, because you don't know what's going to happen 4 months to 6 months from now, and therefore do back to back. And take only short, maybe 30 days or 1 month position, etc. Number one. Number two, we talked about a lack of hedging facilities in India. Well, hedging is allowed, and you know which exchange does it, MCX, but the volumes are not adequate. Indian entities that have big exposure to aluminium are also allowed, with the permission of the Reserve Bank of India, to go to overseas exchanges to hedge their price list. But within India, I work with all the exchanges. I'm on the advisory committee of the regulator, SEBI. There is now a huge and renewed attempt to increase volumes within India. Hopefully in this year, in the coming months, we should hope to see some expanded volumes of aluminium derivatives contract. Thank you.
With your permission, all of you, I'll just take 10 minutes more because we have a lot of questions from the participants. I would request all my speakers to open the chat box. I can see a lot of them directly addressed to Chin. So let us take Chin. In the meantime, Mr. Anupam, I'll be ready with a question for you, which I have. Chin, can you take up the question from the chat box?
Sure. So should I just type the answers back in the chat, or do I just answer them here?
Okay. In the meantime, I'll ask Mr. Agnihotri, how will government policies, PLI schemes, import duties, or carbon regulations impact pricing? Mr. Agnihotri? This was one of the questions which I had from the audience in the registrations. So I thought I'll just put it directly to you here.
Can you repeat the question, please?
See, it is how will the government policies, that is PLI scheme, import duties, or carbon regulations impact pricing? We have this linked schemes which you have, production linked schemes, as well as import duties. All these things, and with carbon regulations, will all these impact the pricing?
Vinaji, I can say with confidence, yes, government policies will definitely shape the aluminium pricing, and the way they can do is like boosting the domestic demand. Majority for the secondary comes from the automobile, regulating imports, especially the primary side, and rewarding the low carbon and value added production. This is the points I can think of right now. But see, government policy definitely plays an influential role. There's no doubt about it. So, and policy can influence beyond global benchmarks. Is no longer, I mean, the pricing depends on the global benchmark and the energy cost. And PLI manufacturing incentives are there for domestic manufacturing. This will increase the demand in sector like the appliances which use the aluminium, the power, construction, and of course the upcoming EV sector. So, I mean, this raises demand for the value added products. I mean, majority it can be seen like the FRPs and extrusions, and there is a demand, special alloys. What one of the co-panelists was talking about, the aerospace alloys. So demand is there, but the volume required is quite low. So in fact, that Aurangabad facility of Hindalco and Elmex, I don't think it has ever run on 100% capacity. So that is there, and import duty, import regulations, quality standards will help to protect the domestic producers, and of course, to support the more stable domestic pricing, better manufacturing quality is required. That is the kind of demand required from the secondary. Carbon regulations, yes, it will play an important role. And in fact, in coming days, the future, the global trade mechanism will be the main factor to price the carbon intensity in the market. That is how it is going to. I mean, there'll be a carbon tax, and all those things will decide the pricing of the aluminum. That is what I can think of right now. That's all.
Thank you, Mr. Ratnadev. Mr. Chin, have you had a look at the chat box? There are many questions. So first we take up some of the audience questions because they have been waiting very patiently for us.
Yeah, I've just typed the answer to Mr. Ayan's question on current Albas situation.
Okay.
But I'll just rephrase it and just talk about it again. But according to our market information, but do take with a grain of salt that Alba is currently on the look for bagged alumina because of current issues in the Strait of Hormuz. So they are looking for bagged alumina through land transport, but so far it seems like they might have met a bit of difficulties. According to market information, and might see a force majeure for production in the near future. But as of now, nothing is actually quite confirmed yet, and it's better to wait for Alba's official reports or their official answers coming into the few days. And then to Mr. Darmawan Lim, he's asking about if China's aluminum companies would like to invest and expand in Indonesia also because Indonesia has abundant bauxite ore mining. Now, I think as of the current situation, China has been quite interested in Indonesia's entire aluminum market in general. A lot of the, let's say, upstream aluminum production, such as bauxite smelting, as well as for I think mostly it's for refineries and smelters. China has already been heavily invested or have certain joint ventures in Indonesia. Can't name certain names out for you, but I'd say that China has already been pretty invested and probably is one of the faster countries that have been investing in Indonesia in general.
Okay, now after that, I'll just come back to one question for Neha. Neha, in light of the recent geopolitical tensions and potential supply chain disruptions, how do you see domestic aluminium premiums evolving in the near term compared to global prices?
So from an Indian perspective, we think that domestic aluminium premiums are likely to stay firm in the near term as global supply tightness and especially due to the ongoing geopolitical tension. This has kept the LME levels also elevated and the ripple effects will be seen in the Indian premiums as well. And also the import dependence, logistic costs, and for bringing the material into India further will add support to the premium levels.
Thank you. Then I have one question for Mr. Gupta. Mr. Gupta, In today's geopolitical fragmented market, is LME still the true anchor of aluminium pricing, or a regional premium and shifting trade flows now determining the real price discovery? I think you can use the text, or sound will not be clear.
Yeah. What I'm saying is LME is still the benchmark. It is the most credible and highly regarded index, and there is the volume traded on LME is very high, and there are most of the companies are using LME as the benchmark. So LME will continue to be the key index which will be used for pricing of aluminium in the world and also in India. Nevertheless, MCX is gaining a lot of momentum in the recent times, because India is developing. As the growth story keeps going, the volumes keep going up, the consumption keeps going up. There is going to be more and more leverage with MCX as well, and then even hedging could be, because right now only small players are doing hedging using MCX. So it is all dependent on how India will grow, and the growth story will by itself take MCX to a different level. But till that time, LME remains the king.
Okay, now before we move to the next question, I would like to quickly take the pulse of our audience. Simran at Begment, could you please launch the poll for our participants and even the panelists? So she will be putting a poll, so you can put your questions. So let us involve them and how best we can get their feedback on the questions she's putting up. Simran, are we ready?
We can also participate, right?
Yes, everybody will participate. Yes, the question one is, what is the biggest supply side risk for aluminium market in 2026? So they have given the multiple choices: tight aluminium scrap availability, energy and power cost volatility, trade restrictions and tariffs, disruptions in aluminium supply. So all of you can participate, and let's get within 20 seconds the feedback.
I think it says hosts and panelists cannot vote.
And in the meantime, we'll take some questions from the audience. Okay. I think the slide says it all. For the question one, what is the biggest supply side risk of aluminium markets in 2026? We have got the percentages in the answers from the audience. Can I close the slide? Okay, we'll take some more questions from the audience. They are already there, which I had received prior to your registrations. Let me pick up one question from there, which was towards Neha. Aluminium ADC 12 future demands and prices.
Yes.
That is specifically addressed to you.
Yes, ma'am.
I can wait for that. In the meantime, can I put a question to Chin? Effects of China building smelters in Indonesia, will it threaten India's AI outlook? This again comes from one of the participants. We have a very good mix of participants, I would say, from NALCO, from Rio Tinto, and Aluminium Circle magazine. So we really have a lot of questions, though the time is a constraint. But as much as I can cover, and the rest of the questions, I've got all the emails. I think I will take up the questions on the email, and I will personally forward it to the participants, whichever we are going to run short. So,
Ma'am, just before we go, can I just answer the question? Yeah.
I beg your pardon?
Can I just answer the question before we move on to the next?
Please go ahead. Yeah.
So in respect with aluminium ADC 12, the aluminium scrap prices are already on the higher side, and the supply is also tight for scrap. And this has been pushing the ADC 12 ingot prices very sharply in the early 26. And imported scrap price or imported scrap has also fallen from October 25 to January 26 consistently, like we discussed in the presentation. And this has pushed the ADC 12 domestic offers to about 290 per kg. And it's nearly 25 to 30% higher on a year-on-year basis. So basically, small die casters are feeling the squeeze currently, though bigger suppliers are managing to pass through some of the costs due to strong auto demand as well. And in concerns with the Middle East tension, the auto demand remains firm in the domestic market. The main risk here would be the LPG and LNG supplies worsening. Factories have to shut, and if the volume of the LPG and LNGs have been declining, the factories will be in a position where they will have to shut their production, and it could also bring the demand for ADC 12 on the lower side. As of now, we've heard that only 15 to 20 days of inventories are been there. So this is one of the key things that we'll have to keep monitoring.
Thank you, Neha. Jim, there's yet another question which has just come up in the chat. Can you take up?
Sure. Let me read the question. So it's on the LME aluminum prices over the next 3 months, as well as the expected annual average for 2026. I can't actually give out very direct or very confirmed numbers for this because, as we are saying, as a lot of the panelists have been saying, this is a very shaky moment in geopolitics in general, and no one knows what's going to be happening in the span of 3 months or 3 years and whatnot. The war might end tomorrow, it might end in 3 months, and it might end in, let's say, 9 months. But according to what's been going on right now, if we were to base right on our scenario that we looked at in my presentation just now, if generally aluminum supply is going to be disrupted by a large margin due to the closing of Strait of Hormuz, as well as from Iran's own aluminum production, it is likely that aluminum is going to be on the stronger side, probably rising up from current market values around 3.5. It should rise at least 3.6. But actual estimates, I don't think I can give it to you very accurately at this moment due to it being influenced a large margin by geopolitical issues.
Thank you very much. Thanks for taking your little time more than the scheduled time.